Well, it is extraordinary. I mean, we haven't had intermeeting rate cuts since October 2008. I think what's extraordinary is, in the past, the Bank of England would say, here's a supply shock. This is temporary. What can we do? We haven't got much we can do, so let's wait, let's assess. They've clearly decided in the latest market moves, concerned about liquidity crunches, concerned about what the market moves might do to sentiment. So they've acted big. Is it the right thing to do? Well, perhaps, in terms of shoring up confidence, we expected them to
Look,
move.
if things go better than expected, if the coronavirus does, hopefully, from a societal point of view, from an economic point of view, go away quickly in the spring, that's great news. They can take this away again quickly. So they've done the right thing, have they, by taking this action? Or does it look a bit panicky, in your view?
I think the latest sort of theory on monetary policy is if you've not got very much, throw everything at once. Now, obviously, they haven't gone quite everything, but 50 will exceed the market expectation. We were expected to move in March, but hey, they've gone earlier. Yeah, I think they probably have done the right thing. You need to sort of put a floor under things. You need to instill a bit of confidence.
I mean, Mark Carney, of course, dare I say, gave mixed messages to the market during his term as well. Is this a firm statement from the new governor, Mr. Bailey, at the Bank of England, that he's going to stand for a different kind of monetary policy?
The thing about Andrew is he's worked across
And you know
all
him
areas.
personally as well,
Yeah,
obviously,
I know. I knew him. He worked on all areas across the bank, so he's a real central banker. He will be worried about the risk of putting loads of stuff on the balance sheet, but he had a great crisis, they say. He also understands the importance of acting decisively and with clarity. So yes, we will see. I haven't seen any statement, but we will see.
Now, this is fascinating because we can go back to the financial crisis, and one of the great criticisms about the tripartite system, and you would have taken a few of those on the chin, I'm sure, as well, that there were cracks between the Treasury, between the FCA, and indeed the Bank of England as well. This time round, and I think it's fair to say we're in a form of crisis, a different form of crisis as well. Can those cracks reappear, or actually has action been taken between those three key bodies to keep banks, A, the clarity of their financial situation abundantly clear to all those authorities, and B, to prevent crises?
Well, one area you won't see cracks, because regulation has now been brought back to the Bank of England. So one other tool they might use is the so-called counter-cyclical capital buffer. That might help banks to lend through this crisis, as you call it. Where there might still be cracks, if people think that the Bank of England's independence is threatened, that could still be a crack if they're just doing the Treasury's dirty work. But, I mean, by all accounts, we can expect to see quite a lot of stimulus from Mr. Sunak today. I don't think that's a problem now, but as I say, the bank has to be very clear it is doing this on its mandate.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.